cautious optimism on the housing front with some new numbers in the housing data today. February pending home sales rising for the third consecutive month. They're up 0.8% from January, but still down 21% year over year. Joining us now with more insight into the housing market is Danielle Hale, Realtor.com chief economist. Nice to see you, Danielle. We've asked this question more times than we care to remember, but is the worst behind us? Because it is entirely unclear when you dive inside the data.
Yeah, so my expectation is that we have seen the low in existing home sales. That doesn't mean it's going to be a straight shot up from here. I do think we'll see some ups and downs in home sales in the year ahead in response to what happens with mortgage rates. A lot of home shoppers at the edge of their budgets as home prices remain high and mortgage rates remain relatively high. What happens to mortgage rates is really going to impact whether people can move forward with their home purchase decisions. And so I expect that we'll continue to see that home shoppers are sensitive to fluctuations in mortgage rates moving forward.
And Danielle, in this economic data that we just got, and also in Realtor.com's, your guys' data, there is certainly a discrepancy in terms of where we are seeing hot markets and where some markets are underperforming. How does the East Coast stack up against the West, and where are the most popular areas, at least right now?
And so in general, markets that are doing better right now as far as sales and pricing activity are out in the Northeast and in the Midwest and the South, where homes are relatively more affordable. The West Coast has not fared quite as well. In part, it saw some rapid run-ups in home prices before, but also it is a pricey area. And so that affordability equation is harder to square out there on the West Coast. And so we're seeing a bit of a pullback in activity out West, whereas the other regions saw an increase in pending home sales activity in the latest data.
Boy, that gives you a real good look at how relative real estate is. Mortgage rates, we'll get Freddie Mac Thursday, but Mortgage Bankers Association has them at 6.45% on the 30-year. Where do you see them heading from here? Because that also has been conflicting in recent weeks.
Yeah, I mean, we're at the stage in the cycle where the data is really important. And so if the Fed can, in fact, get to the end of the tightening cycle with one more rate hike, maybe two, then I think that gives mortgage rates some room to move down. But if inflation is stickier and persistent, and if the Fed has to ratchet expectations up again for how long its short-term rate is going to need to remain elevated, then that means we could see mortgage rates pull back up again. So I think we're going to see mortgage rates fluctuate between 6 and 7% as the future kind of comes into clearer focus. And so we're going to see a bit of up and down in the home sales activity in the year ahead in response to those mortgage rate fluctuations.
Danielle, what about the inventory picture? Because that has certainly been a huge topic, obviously a big issue if you're one of those home buyers looking for a house right now. When do you see that improving, and what's it going to take?
Well, it is improving. It just hasn't improved enough, maybe for most buyers. The market is certainly not a buyer's market because in most markets, we're still looking at much more constrained inventory conditions than we saw before the pandemic. In fact, nationwide, there are still only about half as many homes for sale as was the case before the pandemic. On the flip side, though, home inventory is up really significantly compared to last year. So it's a bit of a glass half full, half empty, depending on what your comparison point is. The good news is that we're moving in the right direction. So we are seeing more inventory on the market available. The sort of downside of that good news is that it's because homes are sitting for longer. So there's less churn in the market as opposed to a lot of seller enthusiasm. And we think that higher mortgage rates are, again, playing a factor there because a lot of existing homeowners have locked in very low mortgage rates. And so it's less enticing for them to make a move if they would also have to take on a higher mortgage rate. Now, existing homeowners who have largely paid off their mortgages and so have very low balances or may even be able to make a purchase in cash, they're less affected by mortgage rates. And so those are the types of buyers that we're seeing active in this market. Now, the exciting thing is that we're moving towards the best time of year for home sellers when you think about the seasonal conditions that we see in housing. So that's going to create some opportunities for homeowners going forward. If they do choose to participate in the market, we're getting very close to the best time of year to list your home for sale.
Then when is the best time to buy a home?
When is the best time to buy a home? So it depends on your situation, but seasonally, buyers generally have the best balance of opportunities in the fall, sellers in the early spring.
All right, excellent information. Danielle Hale, appreciate that.